Morning. This is Arnie Waters. Looking out at the gold outlook for today, we're seeing gold trading around 1680 or so. People are trying to day trade gold. They're getting in, they're getting out, they're unhappy. It's really, really difficult to trade a market on a day trade basis that's got so many external factors. The reality is that if you try to do that, you're likely to be very disappointed. In my opinion, the best sign that gold is going to have a difficult period is that so many professionals think everything is great. So that's kind of a contrary indicator. We might have some tough days in here, but our position of accumulating gold has not changed. The same thing with platinum and the platinum group metals. We're going to see a tremendous upsurge in those areas. And part of the reason is more and more liquidity is being injected into the various systems. This taken together with the fact that the European central bankers are starting to begin the process of turning away from austerity. Now, the only way they're going to get away from austerity is to really print a lot more currency than they have. This is going to be terrific for gold. The weakness in gold we're seeing here is the reaction to the poor Indian results. And the cause of the poor Indian results is the rupee is increasing its devaluation. So it costs more and more money to buy the same amount of gold in India. And until the Indians develop a program to resolve their long-standing economic difficulties, that's going to continue to be the case. The Chinese situation will only grow worse. The government of China is obviously lying about the extent of difficulties in their economy. One of the signal comments about China, and it relates to the totalitarianism between China, Russia, and Iran, is that the totalitarian governments control the press. The totalitarian governments limit opposition. So there is no one to say internally that the government's lying or get out the kinds of reports that come out in democratic countries that reveal what is in fact going on in the economy and what's going on in the country without the filter of government censorship. So in our opinion, we're going to see gold make a big up move. We're going to see deleterious effects on the U.S. stock market. But those deleterious effects are going to be limited by the fact that Bernanke is going to keep the spigot open at the Federal Reserve as long as it takes until a period of inflation arrives. Now, that period is not likely to arrive anytime soon. So that means that if the stock market goes down 200 or 300 points, there will be a burst of liquidity injected into the system, and that in turn will put more money in the stock market. It is quite interesting to note in the stock market that there's been very little retail activity. It may be that the retail market is completely dead for the foreseeable future. So this is Arnie Waters. Aim for the ice flows, not the open water. Have a super day. Thanks.